But Jarrett, real quick, that book was Walking with the Poor by Bryant Myers from World Vision, and I read it when I was doing a lot of my humanitarian work, which, for those who don't know, was really centered around a lot of missionalism. But what I thought was really interesting, because I was in Haiti and I was working with a lot of voodoo. Oh no, I was around. I wasn't working with. I was around a lot of people who were spending a lot of time in voodoo, and of course, I had my preconcepts from the West about that. But very quickly, those were dispelled. But he called about this anthropological gap spiritually, where in the West he called it the missing middle in the global North, where there's us and there's perception of some higher power, be it government that you can't reach, or be it a God you can't reach. It's the same thing. When we bitch about the government, we talk about that instead of what our responsibilities are as citizens, because it alleviates us of power. We can't do anything if it's the government. If the responsibility on me as a citizen is on me, I have to do something more. I have to be a better citizen. We have to have tougher dialogues. But if I can blame it on a conspiratorial government that's in control, that abdicates me. It's the same with God. But they were mentioning that in underdeveloped or the global South, you have shamans, you have priests, you have this middle tier that you can go to and they can guide you. And it was talking about what we can learn from the global South and bring into the global North. And he called it the missing middle. I thought that was intriguing. And the parallel only is Azukis. I'm going to tie this in. There is a tie in to Azukis. And so, we touched on this a little bit. So the preface is, Aussie, give us some quick numbers. What's the premise of what went on with Azukis?
So Azukis had their elemental mint earlier today, about 3-4 hours ago. They minted out in seconds. The mint was started at 2 ETH, and they minted their entire collection for 20,000 ETH within seconds. So,
and was this bot sniped? Like, these are just bots sniping it up?
well, I mean, someone has to have the money to feed those bots to buy those NFTs. So you're talking 10,000 people putting up $2,000 at 2 ETH each, which is you're talking
ETH.
about
The mint was 2 ETH.
2 ETH. So we're talking about $39 million, $38 million.
And that wasn't was that the whitelist mint price?
That was the whitelist mint price.
Stop it. A 2 ETH whitelist mint.
Yeah. Yeah, it was ridiculous. Like, it's not something you see.
Did the Azuki beans mint at the same time?
I don't know. I don't follow the beans. I've just seen, just haven't seen anything about the beans. I've just seen the elementals from the regular collection. So that's kind of crazy.
I think that's beyond crazy. I think that's a 2 ETH whitelist mint blows my mind. And then you said another fact, Jared. I don't know if you were on. He mentioned another fact of ownership. Tell us the percentages on ownership.
The top 10 holders of these new Azuki Elementals controlled 25% of the Azuki supply, of the Azuki Elemental supply. So 10 holders.
That's not bad to you, Jarrett?
No.
Controlled 25% of supply.
So they own 50 more percent than they are. We live in a world where 1% owns 99%. I mean, that's fairly reasonable. I don't know. That doesn't seem
10% owning.
No, it's not top 10%. It's top 10 holders. So you've
top 10 holders. Oh, I mean, I guess that's kind of ridiculous.
Yeah. Thank you. It is ridiculous. Like,
is it ridiculous? I don't know. I just.
How many holders are there? I've got it up over here somewhere.
Yeah, how many holders? There's
there's only 10 holders, but
exactly.
No. But one individual spent $1 million.
Oh, that's Pepe. That's Pepe Azukis. That's not the one we want to look at.
$1 million on Azuki Elementals.
So that's what got us on our topic, Jarrett. He's telling me some bro or sis went out here and dropped $1 million on this one collection. How much ETH must you be sitting on to drop $1 million on a whitelist mint at 2 ETH each. Like, what do you need to be holding?
A lot of Ethereum.
I mean, a lot. I told him my number is between 70 and 100 million for me to seriously consider that.
70 and 100 million in ETH?
No, just in total assets.
And my wealth. Like, my wealth would have to be 70 to 100 to justify $1 million ETH purchase on a single collection, unless they're a total insider.
Well, and let's be real here. Azuki's the main collection are sitting at 10 ETH. So really buying at whitelist price, you're talking maybe a 5x.
Yeah, I mean, I think it's just a calculated move, and it's about 530 Ethereum. And there are people out there that just have a shit ton of Ethereum, and they're like, whatever, what else can I buy with it? I don't want to sell it. I don't want to put it into dollars because then it's a taxable event. This way I can buy something, leverage up 5x, and then just keep it moving. The amount of validators you would get out if you 5x'd it is stupid.
The amount of validators.
Yeah, I mean, Jarrett, you've seen a bunch of my posts on Twitter of people asking, "Oh, if you had this much ETH, what would you do?" My answer is always validators. Validators, maybe a few blue chip NFT projects, and convert some into Bitcoin.
Wait. School me here real quick. A validator is different than a node?
Validators are the same. Well, they're different because that's different terminology for
different tech,
Bitcoin and ETH. ETH doesn't use nodes.
Okay.
Well, they're validator nodes in some way.
So if you spent 530 to buy these Azuki whatevers, and then they 5x, then you divide by 32, you're going to get around 85 validators. At 85 validators at 4%, I mean, you're basically printing cash for the rest of your life. You're probably printing more than 100,000 a month.
How many validators could you buy with the original 530 ETH?
A fifth of that.
So 530, yeah. 530. I mean, a lot.
Yeah, I mean, I think I've done the math.
16, 17.
Where you would.
How much is enough? Jesus.
Well, okay, 500, and they're talking about. Have you guys heard? They're talking about expanding how much ETH you can stake within a validator to 1,048. So,
really?
if you had more than 32 ETH, you could stake all of that in one validator rather than create
a bunch of validators.
Yeah, creating a bunch of validators.
That's super cool. I really like that.
Because I mean, is there more risk in more like having more validators? Is that riskier?
There's more cost.
Oh,
there's more cost. I would say it's actually riskier running a single validator than it is running multiple validators. Just if you think about, you can have your validator slashed if you're considered doing shady things with the validator, and therefore it might be. I wouldn't, if I had more than 32 ETH or I had enough to run two validators, I would probably run two validators rather than committing all of my ETH on one.
So real quick, in this hypothetical, this person dropped $1 million, 530 ETH. They could invest it. It could 5x. They could buy a bunch of validators. But the point is they could buy a bunch of validators already. And how much ETH are they making? What is that?
They'd be making 1.8586 ETH a month. So at current prices, we're talking about $2,000 on ETH right now, give or take. So you're talking, they're making about $3,700 a month just staking that ETH at current prices.
3,700 ETH.
No, $3,700 USD per month in ETH. So they're at the moment generating about 22 ETH a year. So they're almost generating enough to create a validator every single year with that ETH that they bought Azukis with. Elementals.
What's your FU number, boys?
I've done the math, and essentially, if I had 1,000 ETH, I would not work another day in my life. I wouldn't have to work another day in my life. Um,
That's only 200 grand, right?
no. 1,000
ETH?
ETH is 2 million.
Yeah, it's about
1,000. Oh, 1,000
1.95
times
million.
2,000. Yeah. Got it.
Yeah.
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 Yeah,
So
definitely. I guess maybe this person has already hit their FU number, and this is play money. It has to be, right?
I mean, we don't know who this is. Like, this could be Brian Armstrong. That dude's sitting on 1 billion ETH probably. I mean, he was buying ETH at 14 cents. So, like, who knows who this is, you know? This is definitely someone who's been buying ETH for either they're super wealthy and they kind of got into crypto and they're throwing their weight around, or they were
Mhm.
buying ETH in the pre-sale back in 2014 for like pennies. And they've just
Yeah.
been sitting on, and they have like, 50,000 ETH. And they're like, oh, whatever. I'll throw 1/100th of that at this Azuki thing.
Mm-hmm. Yeah. Yeah, man. Well, and that raised a question that Aussie said, if they're sitting on 1 million ETH, they're already a smart person. And I said, no, I know a lot of unsmart people that are rich and a lot of super smart people that are not rich. So Allison calling us out.
wow.
What?
Wow.
Well, you know what, Allison? I believe in ETH and the future of ETH, and so yes, it would. I would. 2 million does not, buy me a house right now, but it would generate enough. Well, no, if you were sitting on 2
2
million,
million rupees? What are you talking about,
no,
Aussie? 2
I'm
million
talking
buys you
about
a
$2
house.
million dollars within in ETH. $2
Okay.
million dollars in ETH gives me enough to retire. Doesn't give me enough to necessarily buy a house outright. I would want to sit all of that in validators. I would sit 2 million in validators,
And how
and
much
that
would
would
you be earning on 2 million in validators?
about 30 at current prices, about 60 or $7,400 a month. So that would the passive income would give me enough to buy a house, but I wouldn't I wouldn't buy a house outright with that money.
Isn't that crazy to think? I don't think that's true for me because if you're generating 6,000 Canadian or US a month, you definitely can afford multiple houses. Multiple.
I would use that income to buy a house, but I would not actually risk I wouldn't use any of that directly use any of that $2 million. I would accumulate from the ETH rewards. I would probably actually keep working for 2 years. If you gave me 1,000 ETH right now, I would keep working for 2 years. I would sell at the top of the next bull run, cash out all of my rewards, and maybe some of my validators, not all, cash out some of my validators, use the profits from that to buy a house, multiple houses, and set myself up for the next bull run.
Bro. And this might have been we got to talking, me and Jarrett, about infinite money loops this week. And $2 million in validators generating only $6,000 a month with $2 million in real estate, you have nearly infinite money, and without touching the principal. And I hear you. I probably could do it with 2 million in ETH too. Honestly, if 2 million in ETH were to be invested in validators, and I was going to see $6,000 a month, it would only take me about 3 to 6 months for my credit score to adjust as such, and my income to basically qualify for almost any level of borrowing. So without touching the principal, without touching your 2 million, you could get into a property at relatively nothing. And now you're in the property game, and it's like, well, why the property game? And this won't be a real estate episode, but like I still cannot fathom. I'll just generalize to TradFi. Once we got rid of like the curve yields, and
curve yield is still a thing.
Not nearly what the numbers I'm talking about the degen infinite money, like magic internet money, infinite money loops that used to be in DeFi. All of those loops are nearly gone. Like it's hard to find an infinite money making loop in crypto now. And you get shaved so hard at each phase that it's not even There's the question: 2 million in real estate or 2 million in ETH?
Because that's
Yeah,
basically what you're asking. And I actually had an interesting thing. Not interesting. It's something I put up on More Than Blockchain on YouTube today as a poll, and I wanted to share that with you. But before we go there, I
yeah. We don't
actually
have to go
want
there.
Aussie to break down this 2 million. So 2 million in ETH gives you, how are you getting to break me down how do you get to the 6,000 number? What's the number? I thought it's like 4.5% a year.
It's 0.0. Yeah, it's like 4.2. I'm
Okay, so
rounding 4.2. So
4.2.
I'm saying 2 million is 1,000 ETH. 1,000 ETH, 32 validators.
32
Is about
validators.
about 32 validators. 32 validators times 32, so it's about 1,024 ETH. That times 0.042 generates about 43 ETH a year. 43 ETH a year divided by 12 months a year is about 3.6 ETH a month.
So 3.6 times current prices is what, times 1,900?
Yeah, about 1,900. So you're talking about $6,800 US a month at the moment.
Does that check out what you were thinking, Jarrett?
And
Because that's 7,000 a month. I mean, I'm rounding.
and then considering capital gains or income tax, however you probably, if you ran it through ran it through an S corp or whatever, and you took it as income rather than as capital gains, you're talking maybe 25% tax rate. Let's
What?
oh,
Through a
okay.
corporation?
Yeah.
Grant, you're in Florida. You're in a different world.
Yeah.
The free state of Florida, so to speak.
The free state, the free floating land.
He says in
mass of
air quotes
Florida.
if you're listening to this later.
Yeah, so we're talking like I'm saying at least 25%. You could we're probably talking more than that in a lot of jurisdictions. You're talking about $5,100, $150, $5,150 in free and clear cash flow month over month.
That's a lot less than I thought it would be for $2 million. Because Grant's
That's what
right.
I'm
$2 million
saying.
in a real estate is going to give you a lot more. But I mean, it also depends on where the real estate is. You have $2 million in real estate up here in Massachusetts, and you have mortgages. Say you have 2 homes for $1 million, and you have mortgages and you're renting it out. And so there's going to be a little arbitrage. It's way less than $7,000. I'll tell you that much.
You raise an interesting point that we've never talked about a difference between TradFi and DeFi. Geography creates arbitrage.
Yes. Geo arbitrage is how I live my life. That is why I live in Bogota, because I can have a life that in the United States would cost 15 times more. And that's not even hyperbole. And hopefully you
No,
boys will come see.
yeah. Well, and this is an area of your life that will ever be Web 2, enabled by Web 3. And when I'm using this term, I mean digital living versus offline living. You use the digital living to amplify the effects in your personal financial life by doing Web 2 offline living. And and you raise a great point. And this is what I was getting at with like the DeFi yield games, which virtually are non-existent anymore. Because it's digital, we can see what others are doing and flick a switch and create what's called a flat earth. And in that situation, that flat earth situation, all things being equal, everyone can make everything equal. So there's very little arbitrage to be had. Very little arbitrage to be had.
There are some MEV bots that do quite well. That
Meth
arbitrage
bots?
MEV, yeah, they're a type of bots where they do microtransactions that arbitrage different liquidity pools across different dexes and stuff.
But that's the same as, I mean, the margins are narrow, the volume has to be high. That's the same as TradFi.
Yeah,
There's
exactly.
TradFi trading bots that if you can set it up and have enough liquidity or enough initial capital, you too can make stupid coins or whatever. But like that, the pace, and it's, I don't know if this is a feature or a bug of digital money, is that at any given moment, the pace of the flattening equality limits the very wealth creation that needs to happen for the poor. those in need who really need it.
Hmm.
It gives them access to financial identity undeniably. And then, well, then they take that currency. Let's say someone who never had financial identity in Africa now does, and now they have access to the entire online world of money making. But the evolution of digital money flattens much more quickly, and their arbitrage will always be from online to offline because they can have a lot of options online like you do, but the wealth is with those who are not taking advantage. The arbitrage is with those who aren't taking advantage of it, like you in Bogota. That is a very interesting area of study that I need to actually put pen to paper, but you're giving me a sniff of some pros and cons there. That's interesting.
Yeah, I want to say this poll is totally mathematically not fair.
What are you talking about? It's all hypothetical. What do you mean not
Yeah,
fair?
And time out. What poll are you talking about? Because we're
Your
talking.
poll you just put in the chat and the one that you put on.
Why is it not mathematically fair?
What?
10
I don't even know what
Bitcoin-
that means.
10 Bitcoin right now is give or take 300,000.
Okay.
100 ETH right now is give or take 190,000.
Okay.
And then I've no clue what Manhattan real
Why is it
estate
not fair? Why is that not fair? Because it's all
Because
based on speculation
especially
of the
if you're
future
looking-
value.
Yeah, but you're talking at an initial value that is much lower. So you're at a third. You're talking a value that's at 2/3 the value of Bitcoin. So
But why
if
is
you were
that
to-
not fair? It's a hypothetical about 10 years in the future. I
'Cause
feel
everything
like what's
needs to
worth
start the
more, a
same.
goat or a car? Like I could say a shoe or this like mouse. It doesn't matter. The point is they shouldn't all start at the same like that. They don't all have to start at the same starting line to be seen or understood as equal.
I mean, I tend to agree with that. I really don't care where. I think the purpose of the poll is to flush out in people where they think these things are going, and more like what do they believe in. And now this particular poll, because you said Manhattan, I would take the 100 ETH all day long, more than the Bitcoin.
Ooh.
Yeah, because you
All
said
right.
Manhattan. If you were to say 10 acres in North Carolina, I would take that.
This goes back to the three things you want in real estate, right? Location, location, location.
Sure.
So, Aussie, I know that you feel hard done by this hypothetical, but
I feel
what are your
very hard.
thoughts? Yeah,
My
I know
Canadian
it's cut to
sense
your
of
core.
justice.
My Canadian sense of justice says this is
It's taking you down like Titan OG.
totally backwards. I would say I actually answered this on YouTube on your YouTube account, and I said 10 Bitcoin. I would take 10 in this hypothetical scenario. I would take 10
Okay.
Bitcoin over 100.
So why? So why? Because Grant said 100 ETH. So this is good. This is exactly why I wanted to have this conversation.
Yeah.
So 10 Bitcoin in 10 years. I'm figuring Bitcoin sitting somewhere at least around $1 million per Bitcoin. So at 10 Bitcoin, I'm sitting at $10 million.
Great.
At 100 ETH, if you put it all in validators, so for the next 10 years, so times 0.042 times 10 plus the original 100, so you've got 142 ETH in 10 years. Not considering compounding, I don't feel like doing compounding math. That's a pain in my ass. Assuming ETH gets to $80,000, you're talking maybe 11 million 360. That's not considering the fact that you're not paying taxes on the compound on the rewards, which considering the IRS's stance on staking, you would likely have to be paying taxes on that. So more likely than not, I would you're talking that 11 million is probably 10. Is probably less than 10 over time because of the taxes you're paying on staking rewards.
What are you assuming ETH is at in 10 years?
80,000
Per ETH?
per
Yeah,
ETH.
I firmly agree with that for a couple reasons. One, ETH normally sits somewhere between 8 to 12% of what Bitcoin is. So if we assume Bitcoin's at 1 million, we're working on the assumption that Bitcoin cracks 1 million, which I think this will be after 3 more
10.
halvings.
Yeah.
And you get to 10 million. So it's just, sorry, you get to 1 million, therefore 8 to 12%, and the low side would be 80,000. Kathy Woods has also called for that. And I know people may not like Kathy Woods, but she continually seems to be right over a long enough period of time. She's called for an $80,000 Bitcoin by 2030. Excuse me, $80,000 Ethereum by 2030. And so I tend to agree with that. And also, I like how you put them into validators, because that totally leverages it and that takes it in a different direction. Now, I think there is argument for the 10,000 square foot of Manhattan real estate, depending upon where it is in Manhattan. Obviously, if that's in like a super, rich high rise, you may be able to sell that for $10 million in 10 years, depending
If it's
upon
not
how
underwater.
things go. If it's not underwater. Oh, I'm highly worried. The entire East Coast is going to have serious issues. It already does have serious issues, but it's going to have serious issues over the next 10 to 15 years with water. And Manhattan got really exposed in 2012 with Sandy. Things that people said would never happen happened.
Yeah.
So anyways, I think it's an interesting one, but it kind of like is like, are you a Bitcoin maxi? Are you more of an ETH maxi, or are you a real estate maxi? Because I do believe there's an argument to be made for each one of these, I think.
Oh yeah.
Totally. And I can see, like, part of my argument around ETH validators gets invalidated if you consider the fact that you can compound your ETH year over year. And so there is some compound rewards. And so I did straight up admit that. If we consider the fact of the Bitcoin ETH cycle, where if you were to sell all of your ETH at near the top of the market, it tends to drop more than Bitcoin. So cycle over cycle, you could accumulate more ETH, but like between cycles. So your 100 ETH at the top of the market in 2.5 years, you sell it, you could probably buy about double the ETH. So you're now all of a sudden sitting on 200 and something ETH rather than 100 ETH. And you wouldn't necessarily be able to compound that. It's not as easy to compound that on Bitcoin.
And that's one of the most important things, that you have to hold for 10 years. You can't arbitrage, you can't sell, you can't, the validators just kind of gets outside of that, because you still are in possession of it, even though you've put them up basically to run to get interest for you. But I do think that there's, honestly, I think that you could make an argument for all three of them. I like where Grant's head went, where he said, well, the land in Manhattan worries me, essentially, is what he said.
Oh yeah.
But what I've seen in Miami is, as the water has risen, so have the property prices. So I do think that there is going to be this thing in cities that are near water, big cities. So I'm thinking London. I'm thinking, I believe Tokyo's on the water, Sao Paulo, Boston, New York. If we just think of these cities, Barcelona, if we think of these cities, I think that there's going to be this thing, just because of what we see with Miami. Now, as the water's risen over the last, since 2012, noticeably, the prices have actually gone up, even though one would assume that the prices would actually go down. And Miami's becoming like one of the premier cities on the planet. So I wonder if the same is going to happen in New York, where the prices could go up, even though the water's going up, and your liability and the insurance, or basically your risk to holding this thing, could get damaged or whatever. I wonder if that's going to happen. But then there's going to be, for me, there's going to be this point where it's going to crack. Some event's going to happen, and the entire insurance system and our entire FEMA system is going to just break. And they're going to say, hey, you know what? We're no longer supporting New Orleans, for example. I have one of my dear friends. He's like a brother to me. We met in college in 2005. Days after I met him, his family home was destroyed by Katrina. 2021 happens. 17 years to the day, his family's house gets hit again. To the day. And they got insurance, and they're doing it again. And I remember talking with his parents, be like, what do you guys, we're like, this is where we come from. This is where we're going to stay. And I totally get that. But at some point, the insurance system is just going to say, dude, we've covered your house 3 or 4 times over. Like, the premiums you pay don't even come near it. And the only reason why a lot of these insurances is because they get backed up by the fiat printing of the US government. The second that breaks, though, I think it's going to flip real estate on its head. It's going to change it
Well,
forever.
real estate in Canada is already changing. So we are actually right now seeing some of the similar things that you're talking about. Waterfront property has hit new highs in Canada for the first time since 2020. But back in 2019, we had really bad floods in and around Montreal, where I live. Worst floods we'd seen in 40, 50 years. Tons and tons of houses were underwater. And the government literally bought people off their land. They're like, you're too close to, we had a flood in 2017 and then a flood in 2019. If they had been flooded in 2017 and then flooded again in 2019, they essentially either we're buying you out, or you're getting this one last payment to help build, basically flood proof your house, and then you're no longer getting financial assistance from the government. And that's what's going to happen in Miami. Like, the US might be behind us on this, but it will come to the US.
There is a breaking point, and with the US, it's also interesting too because of our federalist system and the way our states are set up. So there's going to be a system where the federal government's going to stop backstopping a lot of this, and then some state governments are going to be able to find money from whoever, private or wherever, their own funds, to kind of like keep things going. But when that money dries up, it's going to be an exodus. And I do think in 30 to 50 years, probably by 2050, there's going to be like the way that right now in Colombia, there's a lot of Venezuelans, and you can feel it. Like, there's just a lot of Venezuelans, right, in the major cities looking for work, because more than 2.5 million, I think, Venezuelans have come over. So you can really feel it. And there's going to be a situation in our lifetimes where there's going to be Floridians. There's going to be like you know how in some suburban areas, at least in Massachusetts, I know this probably exists all over the world, it's called NIMBY, not in my backyard, which is just people just being not the best of neighbors, right? Like, oh no, like, you have to ask to put up that whatever you want to put up, and I'll say no, even though I don't really care, but I'm just going to hold you over the fire. There's going to be a situation where there's going to be like anti-Floridian movements in the Northeast in 30 years. And you think I'm joking, but
I totally believe you, because as someone who was involved in council and in city government,
exactly, millions and millions and millions and millions of people that are just not going to be able to stay in South Florida. Where are they going to go? Atlanta's going to blow up. Charleston's going to blow up.
Bro.
It is.
Central,
but a lot of it.
Sandbar, the central sandbar is like where we're at in Polk County. We have one of the highest points in the state. And
how high
is
that?
Huh?
How high is it?
I think we're about 115 feet above sea level. 115.
That's pretty good. That's pretty good.
Yeah.
Yeah.
Good.
George Pate.
George Pate's sitting right now in front of an AC unit. He's got a fan on. He's got some kind of something cooling his head down.
That's hilarious. But
he's like, not in my Texas.
Not in my Texas. But my whole point is, you're talking 30 to 50 years for them to leave the coast. And I think it'll be sooner than that. Sure. But where will they go? Well, they'll trickle inland. And there might be Floridians up there, but I mean, we already have this all the time with Canadians. I'm telling you, we have so many Canadians down here and license plates that people are like, learn how to fucking drive. Like, oh my God. And
that's what we say about a whole bunch of different people.
Oh yeah. It's like NASCAR on I-95 down here.
Yeah, well, it's because you guys get our old people. Our old people go there because it gets cold here in the winter, and
their bones
retirees.
Can't handle it.
They're called snowbirds.
Are you sure?
In Canada, we have our own term for all of those old people that go down to Florida. They're called snowbirds.
Them snowbirds as well. Yeah.
They fly with the winter. They also go to Arizona and Florida. Those are the two.
But I think you're going to see all kinds of diaspora, and we're going to label it whatever is the obvious trait. But like we were seeing something that the entire East Coast like, if you think about the West Coast, let's contrast it. It's a lot of rock. It's a lot of mountain. And you might see mudslides up in like LA, Santa Barbara, Monterey. You see a lot of that, but it is a very rocky coast and a very steep coast. And they'll see sea rises, but it will not devastate the way it creeps in Texas, the Gulf, and are very kind of sandbar shores all along the East Coast, like all the way up to Nova Scotia. It's like that. And so I think, like, when I look at the 10,000 square feet in Manhattan, already Manhattan is not appealing to me whatsoever, even if prices go up. And this counterintuitive thing that prices go up when water goes up, they're not necessarily correlated. I just think prices are going up on the coast, period. But I do think insurance rates, especially in Florida, for coastal things like, I don't know, you guys remember the Surfside condominium that fell down? And that was actually poor construction. That was not sea rise. It was poor construction. But people in their brains are anchored that way. And you're going to still see a lot of the cost of being there is a rich, rich person's game. And I'm not interested in, I don't know how to sell it. Like, let's say you bought 10,000 square feet in Manhattan, and let's say it just skyrocketed. Let's say you are rocking and reeling. I know how to bank on that from real estate mechanisms like HELOCs and borrowing and insurance protocols. But if I really wanted to offload it,
You'd have a hard time.
and it's got water down there, I can't offload it. If I did 10 acres in North Carolina, you're so far ahead of the curve. You would see much higher significant equity raises. And you could subdivide and sell it out to the average person. There's no one buying that piece of Manhattan real estate in 10 or 15 years when water's standing during rainy season. And I remember in New Orleans too, man, we actually toured their water management facility protocols where the levees broke. There was this new neighborhood. And we went in the neighborhood and we started interviewing how they manage water. And they were showing us this pretty inventive stuff. But that's impressive. But it's inventive because it has to be. They're barely holding the water back with their pump systems. I mean, it's nuts how underwater they are. And it's like some of these places, no. I'm not a maxi of anything but multiple streams of income. I'm not a maxi of anything but opportunism and my core values. And currently, crypto matches my core values. But I actually think the core values of crypto, the people's real stripes are showing. They don't really believe in decentralization. They believe in re-centralization. They don't really believe in security. When it's more like everyone would be on cold storage if everyone actually believed in security. But they don't. They believe in convenience. And so what we're seeing is these ideals that I entered crypto with that I still hold on to, but I hold on to them with a realist's perspective. And I'm going, well, I'm not going to cling to this industry because I thought we had a revolt going on. I thought we had a revolution going on where there was going to be long-term holdouts. There are some, and I will still be a holdout, but my concern was never inflation and money supply. My concern was middlemen in general. And the best way to cut out the middleman is to be not just your own self-custody, but to have earning capacity in nearly any modality. So you hear me talk about real estate right now. We're working on, I think I mentioned to you guys offline, we're working on SBA loans because we don't mind the traditional system so long as it's an infinite money cycle and I can buy up businesses and sell businesses. So it's a long process, but I'm more into my earning capacity than anything. And I'm developing a disappointment in crypto enthusiasts, pseudo crypto enthusiasts, the way I've developed a disappointment in the church. I have a true deep passion for what I believed Christianity could have been at its core tenets. But I do not see the ability of the average person to walk it out. And I see that parallel happening inside of me with a lot of crypto people. I'm like, man, you're not walking the walk, son. You know?
No, there's a lot. I'm seeing there's a lot of stuff on crypto Twitter that is just mind-boggling to say the least from people that claim to be into crypto.
Oh yeah. Now this quote. Oh, go ahead.
Go
this
ahead.
From George
Water's
Pate.
life is totally.
Well, this is why I do love Florida and East Coast, and why I love being out in the West Coast. But I love being in rainforest areas. I love being in even like Washington State had a lot of rain. I wake up and when I hear the pitter patter of rain, it's just I feel relieved. And so, George, I feel you on that. I will always live in a rainy area of some kind. I loved the desert. I lived in the high desert for a while. I lived in Taos, New Mexico, which was high desert for 2 months in the middle of summer. I lived in Breckenridge, which was dry. I've lived in it, but I still prefer. I would rather have standing water in the streets of Miami any day of the week, because that's a slow roll. What were we gonna
I
say, Aussie? I'm sorry.
No. I mean, when I think about where I'm purchasing property in the future, I'm looking at predicted rainfall patterns and how rainfall patterns are predicted to change, and deciding where I think there's going to be enough water,
Oh yeah.
to like enough rainfall that I could do water collection and as well, and just keep sustaining that water's life. Is definitely a core quote, and that's why I like Grant. I like that you said 100 ETH, and I think that's just when we think about location and everything and earning potential. I think there will be a way to earn money, more like significant chunks of change on your Bitcoin in the future. But right now, the only way that you can do it is with ETH.
So
You
what do you
can do it
think
on
of?
Solana and Cardano, but
Not yet.
those prices aren't. Those aren't as guaranteed to continue going up as I see ETH is.
So how are your feelings a week on from the Bitcoin, or sorry, yeah, the Bitcoin ETF from BlackRock and others? And talking to a family member of mine about some of the inherent flaws, because a central bank does not control supply, that fact prevents a lot of these infinite wealth cycles we've talked about, because there's so many intermediaries required. I put that in air quotes, to allow for lending and borrowing mechanisms, because it's unpredictable. There is no intermediary. That means there's no one to go to. There's no court of law to back something up. So the borrowing and lending mechanisms, they require a complicated legal construct that Bitcoin doesn't have. But we introduced the synthetics like the ETF, and those suddenly suck in an asset into a system that we're familiar with, so that borrowing and lending. And by that, I mean, I can acquire a bunch of BlackRock ETF that is based on Bitcoin. And then if my portfolio has stacked enough and I've held on to it enough and the market's good enough, I can go take out a mortgage or a loan against that money and go acquire new property or have an equity event against my what's called a portfolio loan. That's only possible with synthetics and I guess TradFi systems. A week in, how are you guys feeling about ETFs like BlackRock's ETF?
BlackRock's ETF is interesting because of what you're talking about in terms of a portfolio loan. Because right now, 10 Bitcoin. I think 10 Bitcoin that's a substantial amount of wealth. Even now, that's 300. Let's talk in today's numbers. That's $300,000. Frig, I would wish I had $300,000 right now in 10 Bitcoin, even if it was sitting in 10 Bitcoin, given my current situation, like Allison loved to point out, being a young buck that I am. But the acquiring the equivalent of 10 Bitcoin in BlackRock stock, like ETF, is more valuable, likely, to the average person in current. In current. Oh my God.
Jessica.
She got him to say, "Oh my God!" She got him to blush. All right, Aussie. While you sort yourself out, I'm gonna say that I agree. I think right now having 10 Bitcoin and ETF is probably better for the average person. But I think that there's going to be a lot of financial products that are going to come out over the next 24 months that are going to completely change that, and people are going to want to have pure Bitcoin, not synthetic Bitcoin. They're going to want to have real Bitcoin. And I mean, Milo, I never know how to pronounce it. They already allow you to get a mortgage by putting up your Bitcoin as collateral. So just like Grant was talking about, like a portfolio loan that already exists, more people are going to come out with that. And I think once the financial institutions are done with their ETFs or whatever, then the next level is the banks. The banks are all going to be able to buy and sell and deal Bitcoin. And once they do that, then I think we're getting really close to being able to leverage it as a product to be able to get money out. So I do think right now the ETF may be better to play quote infinite money games, but I just think in the future nothing's going to replace real Bitcoin. And I mean, to have Bitcoin in the future is going to be cool because you're going to be like, oh, I'm just like BlackRock. I have real Bitcoin. All you other people have synthetic Bitcoin.
Yeah.
I want to jump on that, and I think that potentially being able to leverage your Bitcoin besides just with Milo is closer in the future than we think. I think would be. I think there'll actually be sooner that we can earn interest on our Bitcoin, even while using it for a mortgage, than we think. Because they can then, because, maybe BlackRock can't get a hold of enough Bitcoin. A lot of people want to buy their synthetic, and they pay you rent on your Bitcoin so that they can have their backing. They pay you rent for your Bitcoin, so they essentially potentially pay your interest on your mortgage. So you can agree to loan your 10 Bitcoin or whatever it is out that you're using to back your mortgage. And they pay the interest on your mortgage, so you get a 0 or maybe even a negative interest rate mortgage because you're renting out you're backing it with real Bitcoin.
That would be interesting. I hope that's on me. I'd like to see a roadmap from Milo. Go ahead, Jarrett.
Yeah, I just think that all these things are going to happen. I think if Bitcoin gets as scarce as $1 million Bitcoin, people are going to the banks are going to want to hold real Bitcoin because they're going to want to give their customers real Bitcoin. So I just think accumulating it is never a bad thing. George Payne said, would my Bitcoin be worth more because it's mined on solar rather than one mined on grid power if the CapEx of my project allows my ROI and profit at the same time? That's a good question. I pushed back and said I don't think it matters whether it's green Bitcoin or oil Bitcoin, for example. But I don't know. I mean, we'll see. I just don't think
What
there's
is
an appetite for
CapEx?
that. Your capital expenditure.
Oh, sorry. Got it. Okay.
Yeah.
Would my Bitcoin be worth more? I don't know. Like, I think what we'll learn pretty quickly from these ETFs, these Bitcoin ETFs, I think what we'll learn is that because retail investors generally avoid responsibility, which is why they have opted for, as most people do, and it's not a character flaw necessarily. It might not be good for society that people abdicate their own research of their own investment to others, but that's the way it goes, and that's human nature. I think because of that, we will see a decoupling. So I think it will be hard to know that I've acquired 10 Bitcoin worth of Blackboard ETF. And by that, it's like, well, maybe at one point Bitcoin was worth, let's just say, 20,000, and I have invested $20,000 into the BlackRock ETF. At that point, Bitcoin could be at 35,000, and your ETF could be at 10, or your ETF could be at 100,000 and Bitcoin could be at 15. I think that it will be a decoupling. Now, if it's anything like gold, the hope is that it won't. You don't think so?
No, because that's how we got the whole Three Arrows Capital collapse and the UST collapse.
Explain that, though. You have to explain that. What do you mean?
Yeah, explain that, Aussie, please.
So part of why UST collapsed and Three Arrows Capital collapsed was because GPTC was originally trading at a premium compared to spot or real Bitcoin. So they were buying real Bitcoin, selling it in GBTC, and netting a profit. They were
saying it was pegged, and an ETF isn't pegged. It doesn't have to be.
No, GBTC wasn't pegged. It was trading at a premium, and then it was trading at a discount. When it flipped and the bear market happened, it flipped to being a discount. And so Three Arrows Capital Infinite Money Loop ran out, which they were using to help back some of their UST loans. And then when their money loop stopped working, they created the entire UST debacle in the UST depeg to try and save themselves from going completely under. And
so it is your belief. Let me just see if I understand your belief. It is your belief that in this case, we're talking about the BlackRock ETF, but ETFs that are Bitcoin based, effectively what you're saying is that they should be pegged. And if you divvy up a $20,000 Bitcoin and you sell 1,000 shares, they should all be worth 2,000. And if Bitcoin goes to 30,000, they're now worth 3,000 each.
Yeah.
I know that's the retail trader fantasy, but you believe that is how it should work, or it will collapse.
It will have to work that way, or else you are going to create problems. You are going to create an exploitable system that will, in essence, allow people and create a situation where we could have another collapse of some kind, because you could essentially have these ETF fail because they won't. If the ETF is ends up starting to trade at a discount because people think that Bitcoin's going to go down, and so they start discounting spot Bitcoin from real Bitcoin from these ETFs. As people try to mint more, buy this ETF, and therefore buy more Bitcoin, the trust has to buy more Bitcoin. Like in the BlackRock case, they won't actually have enough money to buy the Bitcoin that they're supposed to get backed at if it starts divvying from their baseline. And if it keeps, even if they're benefiting when there's a surplus, when they're selling at a premium, at one point, if it starts trading for a discount for too long, they will run out of surplus money, and therefore they're not going to be able to meet their legal requirements of being backed by Bitcoin and representing their holdings properly.
Is it your understanding that all ETFs are pegged to their supposed underlying asset?
They have a net asset value, a NAV, and most ETFs trade near their NAVs. Sometimes they will trade for a premium, and sometimes they will trade for a discount, but generally they will always go back towards their NAV, their net asset value, because market arbitrage forces it to be that.
Market arbitrage so it's not being traded like a stock. The profile of the person investing in an ETF is trying to get some degree of arbitrage based on the net asset value and the cash injection. So if you have, for example, we talked briefly about the Francis Bacon triptych that's being IPO'd, and that is a $52 million painting. They're selling shares, they're IPOing, but very quickly a stock can decouple very quickly from the underlying value of that singular asset. But in the case of, say, for example, we have a $20,000 Bitcoin, we create an ETF, we sell 1,000 shares, it's $2,000 each, and it's $2,000 each, and but they now have a cash injection because we bought those ETFs shares. So they have an underlying asset of $20,000, but we put in $20,000. So now their net asset value is $40,000 because they have $40,000 in cash and they have the underlying asset. Is that correct or incorrect?
I didn't totally understand that last part, but if you were to buy, let's say you were to buy $20,000 of BlackRock's ETF, and they are obligated to buy that value in Bitcoin. And so
they're obligated
because it's a Bitcoin trust. And so they don't hold any cash. Every day, if you are buying or selling shares of that ETF, they are either buying or selling shares Bitcoin from that trust.
That's interesting. So this is all new to me. I did not know, like, words like obligated are very different than words like we'll try. And here we go. BlackRock's Bitcoin ETF is not obligated to buy Bitcoin. The ETF is futures-based, which means it holds the front month futures contracts. Futures contracts expire, which is different from holding Bitcoin.
Well, that's a futures ETF. That is not a spot ETF. If BlackRock is holding futures, then that is not a spot ETF. And then any of the headlines that we've been talking about for the last week and a half, 2 weeks, are total figments of clickbait.
Interesting. BlackRock's Bitcoin ETF is a U.S. spot Bitcoin exchange traded fund which is not obligated to buy Bitcoin, but the ETF futures based on Bitcoin, which means it holds the future month futures contracts. Futures contracts expire, which is different from holding Bitcoin itself. It's interesting, and we should know this because, so, we're in the weeds on this topic, and anyone dropping in, like George Pate's comment, LOL, no, don't let them know about arbitrage trading. And he's right. The people out there don't know about arbitrage trading because this stuff is nuanced, difficult, and legalese. But I also think that's the price of being a citizen who can reap rewards. And this goes back to a conversation we had, I think, last week, where I actually foresee people like us who speak this language will go underground, and the average retail person is like, I just buy BlackRock. What does it mean? I don't know. Don't care. I see it grow, and that's all I need to know. And I can borrow against it, and I can, do tax write-offs and purchasing it, and I'm good. And you're like, all right. And so I think the opportunity, I think we need to continue to try to educate people because I think we can help them with freedom. But I think very quickly that window of the mind will close.
Yeah. To me, that if they're called, the BlackRock's got a very good marketing team if they're calling that a spot ETF, because it's not a spot ETF. You're buying you're speculating on futures of Bitcoin.
Yeah.
That's what that ETF is. It's not a spot ETF. If it's a spot ETF, it should be trading at the exact value of Bitcoin, and they should be responsible for holding that equivalent amount of Bitcoin. And as new units are minted and burned every day, they either buy or sell Bitcoin according to how many new units are minted or burned of that ETF.
Yeah, because I thought it was more like a spot. I thought we already had a Bitcoin futures ETF.
We do have futures ETFs.
So that's like nothing new, but I guess this is just because this is BlackRock, and it's also called a trust, which I think is different. Maybe the way it's set up, there's that does matter. I don't exactly understand maybe how, but you asked Grant, have our opinions changed? I mean, I think it's super bullish that since BlackRock came out and said that they want to do this, all these other financial institutions have
Fidelity
also come
just
out.
Confirmed today.
Thefidelity just confirmed. So BlackRock is 8 trillion. Fidelity has 4.5 trillion under management. So even if you just take a small percent of their treasuries, and you say you're going to buy Bitcoin with it, I mean, it gets it gets quick, really, really. It gets stupid really, really quick as far as price. So if either one of these ETF passes, I think you're going to see Bitcoin double in about 2 weeks, probably less. So
the BitBlonde, by the way, called for a bottoming cup pattern in technical trading, and she's calling for the very next peak. If we break a resistance at 31.5, she's calling for 40 Bitcoin, within a week or month. Something like that.
Yeah, I mean, I was always surprised if we cracked 40 by the end of this year, but I couldn't have foreseen a BlackRock ETF. I couldn't have foreseen a Fidelity ETF. I couldn't have also foreseen, even when I made those, that 3 U.S. banks would fail, all equaling $450 billion. Sure. So there's just been a lot of things that we kind of can't take into account, or information we didn't know when we made these decisions, but I think 2024 is going to be crazy. I think 2024 is going to see Bitcoin go kind of wild. I think we'll start around 30 to 40, and I think we'll finish around 100K. Yeah, which is ridiculous.
That is ridiculous. Sidebar: I just read this, and this is what I've been reading while I've been talking. For the SEC to approve this for BlackRock, they filed what's known as a 19B4 filing, which also included an SSA. Are you familiar with this? Surveillance Sharing Agreement. The Surveillance Sharing Agreement allows for the sharing of information about market trading activity with the SEC. They will have your data. So if you are concerned at all, and I'm generally personally not, but I know a lot of people in our space are concerned about privacy. Now, they say that their biggest concern for this agreement is related to market manipulation by BlackRock.
Interesting.
That's their top concern. And they've cited this amongst previous rejections. So basically, they have rejected BlackRock's application multiple times and finally approved it based on an agreement to do surveillance sharing. I didn't realize that. It sounds like ARK Investments has its own Bitcoin ETF already. And I don't know.
I think they have a futures.
Well, and that's what I was going to say. I think that it must be based on futures if we've made such a big deal out of this being spot.
I believe it is.
So, Aussie, I stand corrected. I am hopeful that you're correct, that it bears out, that this is truly spot. And by spot, I just read somewhere that it can be up to 0.65. Like, it could be up to, what is that, 35% off of spot. So, like, if Bitcoin's at 10,000, it could be at 6,500 and still be considered spot based on SEC's, which that's arbitrage, right? For or against. In that case, that would be some put arbitrage. You buy over here and sell over there, but because it's a synthetic, you're not really buying the Bitcoin itself. So I think
but you're supposed to be able to redeem it directly for Bitcoin.
And I should be able to take my BlackRock stock to some DeFi platform and exchange it for
you're supposed to redeem it from BlackRock. Apparently, that was what everybody was talking
secondary about. Market right there. See, and I'm telling you, I can easily hear the arguments of true degens going, "This is why you gotta just do self-custody because it's so complicated." And this is why I hear rich people rubbing their hands going, "This is why I pay 10 people on staff to figure this shit out for me because I can make these spreads." And it's like, damn, like that's a complicated mechanism to be able to go, I can redeem this. And it's like, are they going to allow average people? Go ahead, Jared.
Yeah, I didn't know that. I thought that they were just going to back it with Bitcoin. I didn't think you're going to be able to
I've heard that you could redeem it. I've heard that. And if you can redeem
I've never heard that before. I've never heard that before for any ETF.
So the reason, like I heard from Grayscales, you could not redeem for actual Bitcoin. You could only sell it. You could bring Bitcoin in, sell it as GPTC, and redeem the cash, but you could not directly redeem the Bitcoin. What I heard was that with BlackRock, you could redeem the Bitcoin, and that was a huge deal. But if you can't even,
I don't see how that works. I don't see how that works. It goes back to the things you were saying, that if you buy it with a premium or if you buy it in a discount, the second you get into that world, you could be in a situation where you don't have enough money, literal fiat, to go buy the Bitcoin to back what you said you're going to back. So I don't see how that works, because then if there's a run on the BlackRock Bitcoin, I don't think that they're ready for that, seeing as how other platforms just haven't been able to figure that out yet. You still have withdrawal times where, it's like, okay, you bought, but you can't take it off for like 24 hours, 48 hours, 7 days. I don't really see how that would work.
And I just checked with Google Bard, so the quality of the response is questionable, but it says authorized participants can redeem shares at NAV, net asset value, at any time. This is my point. How do you become an authorized participant? Is it a minimum holding?
You have to probably be an accredited investor. That's probably
or a Mason.
Yeah.
Yeah, you've got to be in. So this is going to be an arbitrage of opportunity that's only available to the select few within BlackRock.
Yeah,
and that's how the rich are going to get richer, and all of us regular normies are better off just holding Bitcoin.
Now, we don't have time to get into this because we got to wrap up. But Jarrett said a quote, and I'm going to drop it here so that we come back to it. Jarrett said to me on the phone, how many people have actually seen and learned about wealth through the lens of crypto versus some of us who learned about wealth long before crypto? And there's a disadvantage. There are some historical, clear-sighted advantages of having learned about wealth through crypto, but there are major blind sides to having not learned about wealth prior to. And I was hoping we would get into that today. We brushed alongside of that this entire time.
We did.
But at some point, I want to earmark that. So remind me, boys, because I think we need to continue to talk about wealth, which is why I am an earning capacity maxi, and an opportunist more than anything. Because it changes. Go ahead, Jared.
Yeah, let's pick that up on Friday. I think
I
that would be
would
a good
love to talk
bookend for
about
this
that on
week.
Friday.
Cool.
Yeah.
As
Cool.
someone
Shout-outs. Go
who's
ahead.
learned a lot about wealth through crypto, but has, thanks to my exposure, you guys learned a lot, and through YouTube, a lot about wealth in other ways now too. I think it's a very interesting discussion that we can have.
Yeah. Very cool. Very cool. Shout outs, boys.
I'll start. My shout out is to George Pate, who's stopping by, even though he is in a sweat lodge that he calls Texas.
Sweat lodge.
So, shout out George Pate.
Shout out to
ahead,
Jessica for joining us to check out my accent. Thanks. Go Canada.
Go Canada. My shout out is to the fool MFer who decided to drop a milli on Azukis, like whitelist mint at 2 ETH each. Whoever you are, my friend, let's be friends. Let's hang. What the hell are you doing? I'm seriously, I question your life choices, but maybe I need to be sitting at the feet of a god. Because that's next level degen shit. I don't care how much you're sitting on, bro. Like, what?
It's a lot.
What are we talking about? And today flew by. Flew by. I don't even know how we got into the weeds, but it flew by for me. So thanks, everyone, for stopping by. Check us back out. We'll be back on Friday, 10 a.m. for the Friday free-for-all. And we'll see
And
you
Grant
guys
will
there.
maybe bring his cowboy hat that he's promised several times.